Hey guys, welcome back. This is Arshil Haq. I have not made a video in a long time, so I'm going to give you guys something really simple today and very easy to understand, which is the biggest mistake you guys are doing every single day when trading. The biggest market structure mistake that most people are doing after all, like so far at least 50 hundreds of people, the smart money concepts, and like I trade very differently to most people. It's very simple, it's very basic, but the most effective, because at the end of the day, if you're making money or not is what matters. It does not matter how you do it. It does not matter how much knowledge you have. If you're making money, you're good to go. That's all trading is about, right? And trading is mostly about mindset, so that's how you make money. But the market structure mistake that I'm going to talk about today is not that difficult to understand, and I'm going to show you guys with some examples today. But to give you guys a clear view first, let me first explain what I'm trying to explain. So basically, as you guys can see, what happens is this is high, higher, low, higher, high, higher, low, higher, high, higher, low, higher, high, higher. This is how the market structure goes, right? Then you break structure, then it happens low, lower high, lower low, lower high, lower low, and so on, right? This is how the market structure goes. However, what most people miss out on is mistake on basically is the difference between a liquidity capture, which may be this, okay, which may be this liquidity capture, and a structure break. So what happens is, let's say this is market structure, right? Let's say this is market structure, and this was just a liquidity capture, but a lot of people thought this was a market break, like this was a breaker structure. Or even better, this would be a better example, like let's say this, okay? So we're still bullish, but over here you can see it looks like it was a market structure break, right? This is something most people miss out on. So you would probably try to enter over here as a bearish setup, and you miss out on, and the market is still bullish, and you have a loss in your trade. How to avoid this, and how to know if it's genuinely a market structure break, or if it's genuinely where the market is heading? Is it bullish or bearish? How to exactly understand that? Now, the good thing about it is that the line chart actually gives you the best view of market structure, and that's what I'm trying to explain here. The line chart is the real key to understanding market structure. Now, for me, I don't even need it anymore, because it's just so much habit so far that I don't even need it. I can just understand. But let me explain to you guys why exactly is the line chart showing you the difference. So basically, what market structure is, whenever you break a structure, it has to be structure equals bodies. Sorry about that, the mic fell down. So structure equals bodies. And what do I mean by that? I mean this. Look at this. For example, this candlestick, right? So this candlestick, these are the bodies, not the wicks. So we don't want the wicks, we want the bodies. For structure to be valid, we want the bodies. For example, this, right? Up from here to here. This is the high to the low. No, sorry, not the wick, the body, right? So for example, if you look here, this is the body, this is the body, right? However, what people who don't understand do is look at the wicks, like they look at it at this. Now this is a complete different thing. Now look at this. For example, we are bearish, right? We are bearish. Low, lower low, lower high. Here's a high, right? Lower high. Now we're expecting a lower low. But what happened here is, if you are looking at the structure like this from the wicks, you see this as a market break of structure. So you would see this as a break of structure, and probably you would want to take a buy after it. But what exactly is happening here is that only a liquidity was captured, which is this one. This was a liquidity, right? And this liquidity was captured. Now how do you understand that liquidity was captured? Look at this. Look at this line chart. Is there any source of example that shows that it's a structure break? No, it does not. This was the high, low, right? Lower low, lower high, lower low, lower high, lower low. See the example? Now, why exactly is this showing a wick over here, and why exactly are we taking the bodies? Because this structure is the bodies, guys. Most of you, I see this every single day. The people make this mistake every single day. They don't look at the bodies, they look at the wicks. What you have to do is, this is the structure, guys. This from the bodies. Look at the bodies. It's the bodies, guys. It's always the bodies. So unless the body is being broken, the structure is not broken. So for example, over here the structure is broken because the body has been below it, right? That is why the structure is broken. when the body goes below this, so over here the structure is broken, not here. Over here it's still a higher low. We're looking for a lower low, which is after this is broken. So I hope this clears a lot of misconceptions for you guys. I'll try to see another example if I can show you guys, and I think that should be enough. Let me see and try and find another example which looks pretty good. This one looks pretty good. Actually no, this does not, because this is last one. So yeah, it does not. Let me just find something. Yeah, this looks pretty good. Look at this, for example, guys. So this is the structure, right? This is the structure, right? And what happened is, or you can even count this, the overall thing as a structure, right? But what happened is this wick actually went over it. So we are bearish, right? High, low, lower, low, low, high, lower, high, lower, low, lower, high, lower, low, and then we're looking for a lower high, and then we're looking for a lower low, right? So where do you see the structure breaks? Over here, right? So this is the structure break, and over here, right? So these are the structure breaks. So we're looking for lower lows and lower lows. And right now, if this was broken, we would look for high highs, right? That's how the market goes, and probably look up to here, up to here. But what happened here is it was just a liquidity capture overall over here. How do we know that? Bodies, guys. This body never went past this, never went past this, never went past this. The body has to go above. Look at this. The body never went above this. And when you go to the line chart, it becomes really easy, guys. And so we know that it's still bearish, but most of the people who doesn't know that would just turn bullish and lose a trade probably after this one over here, right? Probably lose a trade here. That is what you need to understand, and trade towards the market structure, trade towards the trend. You will save a lot of money, you will lose a lot of less money, and you will win more trades. Trust me, guys. Staying with the trend, staying with the proper market structure is the best thing you can do. Thank you so much for watching, guys. I hope this helped, and I'm gonna make more videos this year. This new year, I'm gonna try and upload videos every single week. So please do subscribe and join my group so that I can help you guys more and more and more.